Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. Today we'll be unpacking the story of MoneyMe. ASX MME play in the fintech space. It's an exciting company with quite a broad variety of products. They really have innovation at their core, really leveraging AI to be able to provide a new component of products and new offerings to consumers around the nation and potentially one day around the world. It's going to be an exciting opportunity. We're looking forward to speaking to the CEO, Clayton Howes. We've had him on the channel before and unpacking all of the recent results and also some of the other opportunities that they're looking forward to for 2022. Clayton, welcome back to the channel, mate.
Great, thanks. So awesome to be here.
It is an absolute pleasure. I guess first question up front, we'd love just to hear your thoughts on the start to 2022 so far. How have you found things and how do you think MME is positioned at the moment?
What is start of a year? We've had an incredible journey. Like MoneyMe is unfolding in a way that we wanted it to be, which is on our way to becoming the generation now choice for consumers. And we're expanding so quickly, but we're expanding with the objective of creating value to shareholders, so profit. And we think we've done everything this half year that's along those journey points for us to create an exceptional business model. That first half, we're talking about, and I'm sure we'll go through it, but record revenue of $48 million. Now that's a 101% growth rate year on year. Cash profit of $10 million for the half year. Now that's up 140%. Gross customer receivables book up 252%. So we're talking about some serious results. And then we go into more what's happening beyond MoneyMe's growth rate. That Autopay product. Then we've added acquisition of SocietyOne. And we've expanded our distribution outlets quite substantially. So man, this first half year, this team has been really, really working hard. And the results are coming through, which is so pleasing.
You had a really solid set of results, as you mentioned, for the past period. I guess the question that I'd love to put forward to you is, we know there's so many different fintechs at the moment. There's a lot of companies as well developing in the technology space. What do you think that special sauce is for MoneyMe, and how should investors be looking at the MME story that differentiates you?
When I think about MoneyMe, there's a few points that make us particularly exciting to shareholders. We're founder-led with a whole lot of innovation. And that speaks a lot. The Australian staff are shareholders. And so the aligned interest is so powerful. We've got a substantially higher addressable market than a normal fintech. We've increased from our personal lending business to having credit cards, to having retail property sector products, to including the recent Autopay, which is the automobile finance market. So our addressable market is huge. And we're a high growth business that's delivering serious scale using technology. The technology is creating efficiencies in our operating model. So that's why we can deliver cash impact positive whilst growing really quickly. And that profit for us with future returns is accelerating quite substantially. Our costs are coming down. Our revenue is accelerating. Our customer base is growing really, really well. And that's all those points that I think are quite different, to what other fintechs have. And at the core, we've got Horizon that's performing incredibly well. We're able to deliver new products to market really efficiently. We're able to delight customers with high automation, and we're able to build out a really serious business with that can't be competed with. When we think about Autopay as our latest innovation, we've moved from having car finance being delivered to customers in Australia, which is typically 8 days, to within an hour. You can go and see a car at a dealership, drive it away within an hour with everything done, security lodged, transaction completed in the traditional way, but just using high automation. So we've got a substantial advantage. And what you're seeing with MoneyMe is a business that now with the acquisition of SocietyOne has substantial leverage. It's got the scale benefits. It's got the more broader mass distribution. It's quite a complex business, but it's delivering incredible results that I think is our difference.
And then just building on that discussion there, you recently put out that announcement surrounding the SocietyOne acquisition. Can you talk about what you hope that unlocks and those scale benefits that you're really looking to build on top of?
Yeah, when we looked at SocietyOne and a few others, we wanted to see if there was an ability for us to complement our business without creating some form of cannibalization or overlap. And we found SocietyOne was that prime fit for us. They got a different customer audience. Their audience are slightly older, so a 45-year-old customer versus our younger demographic customer. Now, when we saw the ability for SocietyOne to have a big customer base, but under a single product, what we liked is the ability for us to use what we've already created, which is a real complete set of products that we can deliver to the SocietyOne customer base. So when we think about SocietyOne, it's not about adding, scale to our business, but it's adding serious opportunity to our business. We can leverage their business under our ownership really, really effectively because we've got Horizon, we've got auto products, credit cards, and we'll be cross-selling those to the SocietyOne customer base. They've also got this really secret thing that they've been running in the background, and that's banking as a service with Westpac, so that 10x platform. That accelerates our ambition, a little bit further. So we'd get there in a few years' time of having a complete, end-to-end product set. Now we get that, really quickly with this acquisition of SocietyOne. So there's more than what meets the eye with the acquisition of SocietyOne. But if you take it purely at an economic value perspective, it's really good value for us because of the cost synergies that we get. When we put these two businesses together, we remove a whole lot of duplication. There's expensive back office overheads, and it's largely people, some premises and processes that we decommission, and we end up having at least a $17 million pre-tax cost synergy benefit. That's a lot. Pre-tax cost synergy benefit on an annualized basis of 17 million. That's big. And then we get these revenue synergy benefits simply by cross-selling to the 25,000 SocietyOne customers, giving them a credit card, which they've never had before from SocietyOne. We really get some added revenue opportunities. So the economics, they speak for themselves. The strategy is bang on. There's an opportunity where there's limited overlap and purely just upside to it.
Really interesting to hear, and appreciate you laying that out. I guess just sticking on the financial side, if you can just give us that overview. You talked about some of the numbers at the top of the interview, but just hearing some of those key numbers that you pulled out from the first half, and what are those numbers that investors should look forward to continue to look at moving forward?
So when we think about what this acquisition does for us on a pro forma revenue basis, it takes our annualized revenue basis, pro forma this year to plus $150 million. So we'll deliver in FY22 a plus $150 million combined revenue result pro forma. That's big. It means that we'll have a book size of greater than $1 billion. Gives us access to immediate scale advantages. And this is before we go into FY23, which is when we get all those cost synergy benefits and all of that, they're like. But the headline for me is quite quickly, we get more securitization warehouses to be able to fund more growth. We get revenue that is quite remarkable, $150 million. We get a book size of more than $1 billion. That gives us access to term out deals really, really efficiently. So that means our cost of capital comes down even sharper. And then we've got this big customer base that we can really start leveraging. And what's the interesting part also about it is the ability for us to execute on this is really, there's a high degree of confidence to do it. SocietyOne has been running on a platform that we're very familiar with. It's largely a Salesforce backend platform. We know how to transfer customers, their data over onto Horizon because we've done it before. And so we're going to be able to execute on this quite quickly. So this isn't a 2-year transition from SocietyOne onto Horizon. This is actually much quicker. We think we'll be able to get it done within 9 to 12 months of, from the starting point. Now, the 15th of March is fast approaching, and that's the date that the transaction completes. And there's actually nothing in the way that I can see of us not realizing that 15th of March deadline.
There's a lot going on, and I guess building on top of all of that, we know that the world at the moment, there's a lot of different narratives playing out. I'd be interested to hear your thoughts. We've all heard about the inflation narrative. We know there's a rising interest rate narrative playing out at the moment, and obviously that has an impact on many of the fintechs, both in terms of potential cost of capital, but also consumer demands. I'd love to hear how you at MoneyMe are perceiving this changing transition and how you're preparing for it all.
Yeah, I think it's an exciting time for us. We've got an innovation-led business. Let's think about, Autopay again. moving from $6 million of originations in its first quarter, that was fourth quarter 21. Then we moved to $37 million of originations in the first quarter of 22. Then the second quarter of 22, we had a combined $150 million of originations. Like the pace of Autopay in a market that's being structurally changing, with Westpac focusing on home loans, Macquarie Bank doing the same. It's creating big opportunities for businesses like us that have got the tech and the capability to really expand. When we are growing at this pace with an asset class like Autopay, a high value customer base like a SocietyOne with homeowner advantages, we get access to much cheaper forms of capital. So whilst there's a rising interest rate environment, we're actually going the other way. Our cost of capital is coming down. So we're actually faced with quite an interesting, different model than what markets might be thinking. Our cost of capital is coming down whilst everyone else's on average is going up. So we're getting some serious scale and cost advantages coming in. Our customers are resonating well with us. We've got a direct-to-customer distribution model, and that's working incredibly well. We've only just recently added our proposition to personal loan brokers in December, and I can give you guys the insight. That's booming. Like our personal loan product through brokers is booming. Autopay direct to dealers is booming. So what's happening for us when we think about the macroeconomic geopolitical environments that's impacting these businesses from a share price perspective, it's actually very different to what's actually going on in the business. In the business, we're thriving. Higher revenue, more customers, more tech, dislocation from the incumbents that's giving us more access to market share. I think the earning potential that we've got now with this acquisition as well, we're miles apart from how where we were about a year ago. So apart from the noise of the geopolitical environment, it's game on for us, and we're going to absolutely take hold of this market share opportunity.
Yeah, it's really interesting because as we know, the technology sector more broadly has seen a bit of a compression in terms of share price valuations over the past period. Obviously, MoneyMe hasn't been immune to that. But yeah, did you have any words that you wanted to share with shareholders or any thoughts about the current share price trajectory and where things may head?
Yeah, personal perspective here, but I've never seen a business with such a high growth trajectory delivering positive cash impact of 10 million in the half year. That is remarkable. Like we're not even, I get it where tech businesses have, some outlook of earnings. That's fine. That all makes sense. We're actually delivering it now. And I think what one smart fund manager told me just the other day, which was he's buying because he's buying for where the future earnings of this business are very, very clearly in place. Said people that will be buying later will be paying for it at a different price. So, hey, those are perspectives that are going around. I certainly think that we're impacted by, geopolitical environments. We're impacted by, a sector that's might not be showing, value to shareholders soon, but we're a very different business. We're creating value, we're growing and delivering cash impact. That's remarkable.
There's so much going on in the MoneyMe story. Would love just to hear any final thoughts and reflections that you had for shareholders as you continue to move forward into 2022.
All I can say is think about what we've done in the last, 6 to 12 months. We've expanded our capital structures quite significantly. We've expanded our product innovation. We've expanded our addressable market. We've created a cash NPAT in a half year of $10 million. We've grown revenue by over 100%. We've increased our loan book assets by 252%. And then we bought SocietyOne. Like that is outstanding. And I can say the outlook is looking even better for us. We're not going to stop there. The MoneyMe brand is certainly something we're focusing on to expand on its diverse. We now have a very, very big diverse customer base, and we have diverse product sets. We're going to see more from MoneyMe. We're going to take and seize the opportunity really, really well. The next time I give you an update, I'm going to be able to talk obviously more wholesome about what else is going on, the banking as a service leverage with SocietyOne, etc. But lots to look forward to, that's for sure.
Plenty to look forward to. It's always a pleasure catching up, Clayton. Thank you so much for joining us. That's the MoneyMe story. It's ASX MME. If you've enjoyed the video, don't forget to hit the like button. Feel free to share it out and make sure you've subscribed and turn your bell notifications on. Clayton Howes, thanks so much for joining us, mate.